Good afternoon. I want to bring to everyone's attention another Chinese stock called BIDU, BIDU, like a Google search engine in a lot of ways. And I have a daily chart for 2019. And you can see right here very clearly that we have an ascending move higher and higher right into what? The major wall of resistance. And it is. So either we break through it on heavier volume, and Baidu would have a much bigger upside move when it takes out this resistance level in the price action. So any little pullback, of course we're going to buy it. Now, Baidu on this weekly chart is very simple. Why is it good? Well, there's a lot of reasons why, particularly when you're making a market and them options that you like. I'm going to point out that the 10-week moving average on Baidu is $168. Okay. I'm also going to say that that red line is a 20-week moving average at 169.71 pennies. That's right. And so it's a long-term consolidation with that blue line. You know what that is? That's a 10-week simple moving average. And it's going flat. And it's going right across there with that red line. And what is that? 169.7 again. That's the 20-week moving average. So we're ready for a breakout because it can go much higher on an intraday level. And we'll take a look at the call options on how to trade the weekly expiration. So here was the range on the equity. Baidu had a $4.67 range, 214 highs. So we're ready to break out and go higher. If we come down in the price, I will give the limit order on the options at the wholesale bid. You can bet that. So we're getting ready. We're getting set up. That's the really good thing about understanding what? That weekly consolidation. And the price is above the 10-week and that 20-week. The body of the price is up here. So when we look at a continuation in the equity breakout, then we understand that there are a certain amount of dollars of that breakout could be like anywhere from $9 to $15 intraday would be the next price move in Baidu, and it would. Here's what I want to point out to everybody on Baidu. Look at they gapped that price up to 3.35. Then they ran it up to $7. How nice that was. Here's what a 170 call, which was in the money. We'll show you that right here so you can see this. It had a 4-day breakout on the call side. So, down here was wholesale naturally. That's where we get them. And that's what you want to be. I understand that. So now you can change everything around and take your action, getting that free 5-day trial. The high was 770 on this. So they went from right here, and the low was 47 pennies. That's how much risk. And you could have got the wholesale bid in there with us because even at $1.20, they went to the high of $7. And now, is there more room to go? Yeah, there is. You can see what happens though over here. When they get that inflated, guess what happens? They come all the way down. You've seen me do it all the way down. So understanding the actual call chart along with the, the call option chart there that no one ever sees. Who knows why? And they don't know how to use them either, for the most part of everyone. 3.7 million shares was traded on it. And that is what we could get out of the option because of the intraday range on the equity was only 4.67. What is that in dollar terms? In our market making dollar terms that we give the order. So 214 highs. And we like selling when they get up here. And then taking all our profit. We like buying wholesale. Like areas like that. Bid pop. You get a bid pop up here. And then When the calls go down in value, you own the put options and you're making money. What a wonderful world that is, both ways. Boy, it's both ways. Walk into the bank. Let it be known here and now. The 170 call, which was in the money there, that's going to be the trade for tomorrow as well. And we will get hit, and Baidu will break out. And we'll probably get like 30, 40 contracts up and out of the money. So when it does make that $8 to $12 breakout intraday, then that price of that option, boy, it rips higher. And then what do? You sell into it